Hello, and thank you for joining us at xm.com. You're watching today's Daily Market Comment by Ref Boyajian. I'm Cristina Marujos. The euro is clawing higher ahead of the European Central Bank's widely anticipated interest rate rise, the first in 11 years, later today. There is some uncertainty as to how heavily the ECB will lean on the hawkish side after it was disclosed that policymakers are considering a 50 basis point increase. Investors are also nervous as to how steep a rate path the ECB will lay out for this year and next. In addition, President Christine Lagarde will unveil a new tool aimed at preventing fragmentation in Eurozone bond markets. Such a tool also couldn't have come at a better time amid a fresh political crisis in Italy, where Prime Minister Mario Draghi has just handed in his resignation, and early elections appear to be the only way out of this mess. Nevertheless, the euro has gotten off to a positive start, retesting the $102 level as Europe breathed a sigh of relief after Russia restarted gas flows to Germany. The Nord Stream 1 pipeline is back up and running. However, the initial indications suggest capacity remains at about 40% or less, which means countries heavily reliant on Russian natural gas imports, such as Germany, will struggle to fill up their storage to required levels before the winter months. In other currencies, the pound came back under pressure after an earlier bounce as the US dollar firmed from overnight lows. Although the odds of the Bank of England hiking rates by 50 basis points at its meeting next month have risen, there is some anxiety about who will be Britain's next prime minister. The slight risk-averse mood was unable to prop up gold, however, as the precious metal sank to a new one-year low on Thursday and is fast approaching $1,680 an ounce. With interest rate hikes around the world gathering pace now that the ECB is expected to join the tightening club, gold's appeal as an inflation hedge is fading. In equities, European markets were mostly lower and U.S. stock futures also dipped as the rebound on Wall Street lost some of its fizz. The S&P 500 closed at its highest in 6 weeks yesterday after a seesaw session. With fears of the Fed hiking rates by 100 basis points next week dissipating and the earnings so far being better than expected, the latest rebound in stocks is looking more promising than the previous attempts we had this year. Thank you for watching today's Daily Market Comment at xm.com.